the different ways to trade. Well, one of the most popular ones that I came up with a while ago was called price level. And this is going to look pretty funky to some of you, okay? Because price level trading is sort of a little bit of using the support and resistance. Some of you have already started using that, right? Anybody using support and resistance indicator from DexFX in there? DexFX, I'm sorry, from Dex Indicators in the system? Yeah. You're already using sort of a concept of price level. Using some of that information that you have at different levels, you can use to kind of sort of put the actual statements at a certain price. And then once you find that level that support and resistance kind of matches up, you're looking for what? This is called structure. And the structure of how price evaluates begins to fulfill whether or not there's a match of a statement that's on Nadex. Okay, let's see if we can fold this all together in just 1 second here. I'm going to show you a few things here. I'm not even going to put on, let me see if I can chart a window here. I'm not even going to, I'm going to use the Trader 4 for right now, but I'm going to zip over to the 5-minute Trader WB on in just a second. But I want to show you this first. Let me zip over here. Go in here. Okay. And what this is a price chart, right? This is a price chart that is, I don't know if you can see some of it. My stuff's a little bit all over the place, right? Here we go. All right. This is the Euro USD. We're going to put it on 1 minute because we're talking about 5-minute trades. Okay. I'm going to back out here just a little bit, and you can kind of see how fast this market goes up and down, especially if there's news. Stuff looks really crazy. I'm going to look for a stable part of the market so we can play with that here just for a second. Let's see if I can find just a stable. All right, here we go, right? Now this is all just speculation. These aren't real signals that came out or what have you. I don't want to show you those just yet. I want to show you just a part of the process, right? So we all know that on Nadex, there are 5 actual statements that come out on the 5-minute system, right? So in these 5 statements, when the second of that minute, so 7:25 Eastern Standard Time right now, happened right now, in just a couple of seconds here, in 56 seconds actually, you're going to have a trade available, right? You're going to have something that's going to come up, possibly. Now, when that comes up, it's always going to appear that the indicative price is going to be at this middle one, right? So 75.67. This is truly at the money, right? This is the center statement. We're going to refer to it as the center, okay? We're going to refer to the one up or the one down as just that, one up, one down, okay? And we're going to refer to the ones all the way on the outside, or we're going to call them the fringe, okay? The top fringe, the bottom fringe, okay? So when you're in the middle, you're going to go either up or down, or sell, or bid, or offer. Or if you're going to go to the one up, one down, okay, so one up or one down, or top fringe and bottom fringe, okay? Very easy to understand, and that's what's going to happen. As you see, 75.66 is the actual trade number, right? Really close to 75.67. So they put 75.67, they round up a little bit, and give you that as the trade that comes over. This is pretty powerful to see because when you see this, how this unfolds, you can automatically start to know which one I can go for. So we're going to say with the AUD USD, let me jump back over here, see if I can get the AUD USD over. I'm just going to drag that over just like that. Okay. And let's just pretend that a signal had just come out, right? And let's just say it's a sell signal. All right. So I'm going to put an arrow on. I'm going to do something like this. I don't know if you can see that little tiny arrow that I just made. See if I can make it a little bigger. Nope. Go figure. But let's just say that that's the signal that just came out. All right. Now in price level trading, I want to look for, because I'm not even going to look at support and resistance, right? I'm just going to come back to here. I'm going to grab maybe a line, right? And I'm going to find some connection. I'm going to find structure. And if you see, I immediately found structure just by the last little hill that happened previously 5 minutes ago, because the structure is very simple to see. Structure right there, of course. Look at that. Almost perfect. It went all the way up and touched the line. And then back here, just looking left, just by looking left just a little bit, I'll find structure. If I macro out just a little bit, I'll find even more structure. One there, one here, one here. If I go back over, I'll see more structure. You know, so this is a pretty good number, and that's 75.67. You seeing the relationship now? Seeing how important it is to find structure? 75.67. Now, what does this mean? Well, you could go back up to where it was and say, I can go to 75.67, but because the indicative price and the spot Forex price has two different pricings on it, indicative is a little bit lower because it uses indicative price over or the spot Forex, which is here 75.67. So when it's a sell, you want to add 2 pips to that. And why is that perfect? Well, 75.69 sitting right there. Now, if I hadn't been gabbing the entire time on price level, I would have just simply clicked the button, put 1 contract in. Because it's a sell and I want $30 profit, I'm going to put $30 here. You see how it says $30 profit right there? That's the best way to know if you got it right. If I put $70 there, guess what? I'm not going to do it right? Even though that'd be pretty cool, it's still not right. $30. Now hit place order. Okay, I'm going to hit close there. Why? Because this is my live account, I just noticed. Sorry, Mike. That's Mike's live account.
I didn't want to say anything. I did not.
That's my live account. Go figure. Okay, so listen. So that's basically what you would do. You would click on that. You would set a working order for the one a little bit higher because remember, you're going a couple pips higher. Now, if you were using that and the price was already moving, and if this was a buy, what would you do? If this was a buy signal, what would you do? You would go to the last little hilt that you could find some structure on, right? Maybe down here, 75.64. You could come up 2 pips, 75.66, and guess what? Look at the relationship, 75.65. You see, it's usually, price level will usually sit around the 1 up or 1 down. Sometimes if you had a lot of movement very quickly, you might get the fringe. But again, trading at $30 and $70 is trading the price so far. Okay, we have a direction on which side of the center we should be on, and you're trading from that level. Okay, so that's one way to be able to trade with price. Now, if you do have any questions, I'm gonna save them for little bits and pieces during the time so you can ask your questions. But for right now, keep all your questions and then we'll get them answered as we go. Now, trading with $30 profit margin, okay, $30 on the bid side, $70 on the offer side. Okay, after you get your fees taken out, whatever the price is going to be, I'm not going to go into that because I don't want to throw too many numbers at you. You're going to have enough numbers already. All right. There is another way to trade from doing what we refer to as standard straight ATM trading. Right. Now, price level trading has a success rate. Okay. And that success rate, I can't give you. And for when I used to do 30-70, I did very well because I used other little tiny things. Like sometimes I would use a stochastic, sometimes I would use other things that made me feel good when I got confirmations. I'm not going to tell you what they are because that's what's make me feel good. There's some of you that like to use certain small things, right? But don't get dependent upon them. Okay, the more things you put on, the more indicators you put on, the more different rules you get that you make for yourself, the less trades you're going to be able to do. And sometimes they're going to keep you out of the good trades and keep you into the bad trades. They're going to keep you out of the good trades and keep you in the bad trades. So you have to follow the system first. And as you get wiser how these things work, you will then start to be able to add certain things for you to help keep you into the good trades and out of the bad trades. Okay, but for now, using the program on one of these systems is going to be very important for you. Okay, and we're going to talk about that here in just a moment. So using price level is a safe way. It's a low to medium risk at times. Right? Of course, not trading news, not trading certain times that we have down in the rules, those particular things. Okay, now the next way we want to talk about is a form that's going to spark off a whole nother generation of trades. Okay. And again, John, I'll answer some questions here in a moment, but I won't be answering too many during the program here. ATM trading is a very powerful way to trade in a price level kind of what we call price trading. So, and it has its own level of success that isn't very high. It doesn't need to be very high, right? And you're going to trade this manually. You're not going to trade it with working orders if you're going to trade this way. Do not trade from the middle with working orders, okay? Because they will be met. If you set a working order from the middle, it will be met. I can tell you right now. When it first comes out, if you set a working order from the middle, it will be met, but you're cutting your money out. Trading from the middle, trading from ATM for when it first comes out is really about looking at a few other small things to see if you're on a trend line, to see if you have some reaction, if there's some other variables that you're not looking at. Maybe you're using RSI, maybe you're using stochastic, maybe you're using some other things. These are the secondary indicators that make you feel good, right? This is what we were talking about. And we'll talk about some of those in other trainings. But for the most part, trading ATM is when the signal comes out and gives you the feel for a direction, okay, depending on which level, which way it's going. You're going to go to the page. You're going to go to the middle one when it first comes out. You're going to see, is it under $50 profit margin? So on the bid side, you want to see it under 50, and on the offer side, you want to see it above 50, usually by $2 or $3, right? Usually by the amount that I have stated here, which is you want to see it between $35 and $45 profit, right? And why is that? Well, simply enough, if the market's kind of going like this, right? And when the statement comes out, that line's right here, right? And if this thing starts to go up just a little bit more, and it gives you an up signal, if the process kind of drops back down just a little bit right after the signal comes out, and you have you're not going to be doing working orders, and it gets really super close to it, this price might still be OTM, right? It still might be above because you're trying to put one in above. So it might be something like $48 here on the actual market price, which would be an OTM, an out of the money kind of mentality, right? Even though that it hasn't crossed the line yet. But because there's so much opportunity with it, the market makers might give you an opportunity to get in OTM pricing. So, and then what happens, right? Then if it happens to go up and you can actually get this pricing, it's pretty good. But this is a very high risk trade. Don't be fooled by how much money's there, okay? That's like the cheese in the trap, okay? So once this thing starts to take off just a little bit, you want to see it about, $45 to $35 profit margin in here, because that means that this is a good level to work with at ATM trade. All right? Because it doesn't have to get too far at this point to get into what? To get into profit and for it to go. We call this the premium zone here, $45 to $35. All right? The reason being is that what happens if this trade loses, right? If I got in, let's say I got in for the buy side, right? And I got in for $55 from this side, okay? I got in, so that's a $45 profit. If I win, I win 45 bucks. If I lose 55, right? And that's one trade, right? This is trade number one. If I do trade number two and I win, what do I win? I win $45, right? But I'm still $10 in the hole. So if I win one more, now I'm $35 up. See, so it doesn't take much to win over your losses from this level of trading. But keep in mind, trading ATM is a high risk trade. You're going to have between 55 and 65% success rate. Let me say that again. You'll have a 55% to 65% success rate. That's why you can see some people out there that trade the 45-55 working order method that I'm going to show you here in a few minutes that are still could be at like 61% and be cha-ching, making still money, right? It may not be a lot of money. You might be doing a lot of work to get to that money, but then we're going to talk about CVG, right? So keep that in mind. That's another way to trade the process is using ATM, using a $35 to $45 profit on the contract, manually purchased, right? You're not using working orders at this point, right? Now, before I get into this, I'm going to answer John's question here. What indicators do you suggest? There's a couple of them that you can start to work with. One is a moving average that you could put on the chart. But again, remember, these are only, a moving average will really help you understand a few things. But the support and resistance from DEX indicators, if you're using indicators, you can use the support and resistance free indicator from DEX indicators. You can use the DEX MACD to help you get to understand that process. And those are the two that I really would suggest for anybody, and possibly a stochastic. Okay, and you'll see if you do the Trader's Mind series, you'll see the two variables that I like to use. But remember, don't add them all and expect you to be able to filter in the gold. Okay, that's not how it works. What you really want to do is to be able to find one of them that gives you a little bit of comfortableness when you're getting into a trade, to help navigate what the trade looks like, to see how well is it going. Not to scalp out. Remember, these numbers are very important to keep untouched, right? Could you create a scalping program of getting in and getting out? Mike, what do I tell people about a scalping program? What does it have to be?
If you're going to scalp on the getting out on a for profit, you should scalp out on a loss as well.
Correct. You have to be balanced. You have to be balanced to be able to scalp in and be able to scalp out. If you don't understand how to get out of a trade, what does a trade look like when it goes bad? If you're asking that question next, guess what? Don't scalp. Just deal with the numbers. Just deal with the freaking numbers the way they are. Some of you can say, well, I don't like to be 65% because I'm not making a lot of money. Not if you're trading one contract at a time. But later, you'll see about CVG. And when you get about the knowledge and the feel of this process, this is what's going to set you apart. This is what's going to put you in that position of being a professional trader. It's going to take you to that level of success you want to be at. But until you understand that, until you feel it, it's ingrained in every morsel of your body, you're going to fight that success. I'm here to help you not fight as much. You're still going to have to fight, but you're not going to be doing it alone. So let's get to the next point. All right. The second way to trade, we're going to continue this, is doing an ATM working order price trading. I know that's a mouthful, right? We're going to use an ATM mentality, okay? The price trading of ATM at the money, but we're going to use a working order to fill it. And no, not from the center. This strategy has a powerful money management overlay and takes very strong resolve, what we were just talking about, in the ability to be able to handle the outcomes. I'm going to pay this as a high respect to Mike Ficca, because Mike Ficca trades one of these systems, and he has come a million miles. When I hear from him go, hey, I'm done trading for this afternoon. I'm going to finish trading up this evening, and I already know at that point I can hear no animosity, no worry in his voice, because I know he's lost a couple in a row. And he doesn't even think about it anymore. It's part of the process. Okay. Now, we'll go over the levels of price trading and all that stuff here in a second. But remember, you have to prepare yourself to do this level of work to be able to get here. And you need to succeed at something. You need to get to your gross success rate. This means how many trades you're going to have to do, Mike, to get to that, you think? Mike?
Oh, yeah. How many trades for gross success rate? I'm sorry, I didn't know you were talking to me.
Yeah. How many think you're going to need to get to that?
At least 200.
At least 200. I would almost stretch to say probably even a 300. So even if we said 250 to meet in the middle, guess what? That's a lot of work. May take you a couple of days, may take you a week, may take you a month. Now, in order to get there, you're going to have to follow some rules. We're going to talk about that here in the discipline side and housekeeping and all that stuff. And you're going to hear about this. But once you get there, what a powerful system it is. Let's go have a look. All right, let's throw some numbers at you now. Okay? Now, you remember that we were talking about the statements, right? One in the middle is the center, one up, one down, the fringe, top fringe, the bottom fringe, right? We keep that terminology solid. And so you'll remember what it is. Use it in the rooms. Hey, I just traded a top fringe. Hey, I just did one up. Hey, I just did one down. Oh, I'm center trading. Okay? So people know, right? Use it amongst yourself. Allow yourself to absorb that kind of terminology for yourself so you can see and hear it from others, and you'll understand how each person's and what they're doing. You'll also know by the way that they trade. You'll also see in their spreadsheets, and you'll see when they share in the rooms what their numbers look like, and you'll begin to immediately know what kind of trader they are. Isn't that wonderful? Isn't it wonderful to be able to see and feel and know that your compadres, the people that are in there working very hard, you know what struggles they're going through, because at what levels they're trading at. They're trading a little higher risk. You can almost start to get a mental picture of how this person works. Now, we need to set the working order. And that's where this is one of the most difficult parts about doing trading on Nadex, is being able to set the working order. But in all actuality, it's really kind of easy. When a trade comes up, simply click on to get the statement. All right, so this is like in the last couple seconds, there's no statements available. Okay, wait, here we go. Click on a number, you put in the amount, copy the price, you highlight the price, and remember, we're going to be using, in this particular case on the sell side, $32. Once you put in the number, you can immediately see if you're right, if your max profit matches what you're supposed to get. If you did $68 here on the sell, you see what I'm saying? It'd be the same. Oh, sorry.
62.38. Yes.
62. You immediately see it's wrong because I have it on the sell. But if I put it to the buy, look what happens. It gets over the right side, right? And you would then click OK. Now that's going to put it down in here in your working orders area. I should have had a demo count up so I can done a bunch of these for you. But you're going to see in a lot of the trading that we do when we are out there. I had some problems from this computer when I was getting into my demo and couldn't remember all the numbers and didn't know until last second. My folly. Okay. So when we come into trading with this process and the numbers that we're going to be using, we're going to have different things that we're going to be able to do. So a mid-risk trade level that we're going to be using on a working order is something that Tim H and Mike came up to work with together. Okay. Mike was using a little bit lower variable, and seeing Tim was doing a 38.62. And when Tim H, I think he's in the room here, right? Tim H, yep, senior level trader, wonderful person, okay, came up with both of these strategies right here. Believe it or not, worked very hard to show them. He's one of those kind of people that took it to heart when we asked for as much help as possible, and he really started to try to find out what was the best line to use. Started testing out 38.62. Was doing very well. Just didn't come up with a number out of his head. Started out at a number, worked his way to this number, then worked his way to this one. And then I started developing strategies and forethoughts and mentalities behind each one on when to trade and how to trade it and what to do and how to do. Okay? And this is what it really comes down to. Is this 38.62, right? 38 for the sell side, 62 for the buy side. Is the mid-risk level that we're going to use for the one up or one downside only. And you'll find out here in a second, when do you trade the fringe? And I'll tell you about that here in a second. But for now, we're just going to use the one up and one downside. Okay? So 38.62 is very important to know, because what happens on a 38.62? Okay? If I win, I'm going to win $38. Yay. If I lose, I'm going to lose $62. Right? So the amount of your ratio of how many wins to losses you need to recover is what? 2 trades. So let's just call this an R2 trade. Right? So my risk management from this, saying I'm only doing one contract, if I lose, I'm going to lose $62. And if I do, I need 2 trays of 38 to get over 62, right? Which is what? $76, right? And after fees and all that stuff, but you guys can figure that stuff out. But I'm showing you real money here, right? 1 to 175, right around in that area, Rob. But for our case, we're just rounding in an R2 because there's no way I could do 1.75 trade, right? So keep that in mind. That the availability here is that if you do 2 just like this, you're going to get back and you're going to be in the plus $14. right? Immediate ROI. Okay, positive ROI directly from 2 trades. So yes, 1.75 would put you with 2 trades in immediate ROI plus ROI. And that's very important because you want of the best system ever, okay? Of 4-to-1, 6-to-1, 8-to-1, all that stuff that you can get in Forex, you're never going to get into an 8x. You're never going to get a 2-to-1 ratio, right? Why? Because it's 50-50, right? Unless you're trading OTMs and you're doing like $10 or $8 on the other side, and then you got a 10-to-1. But come on, guess what, folks? You need to do about 300 trades or 100 trades at least. Be able to get to that. And I don't know too many progressive suggestive systems out there, that they can give you signals for OTMs. You might as well just hit the fringe on the opposite end and just keep trading that one side, and hopefully one day it'll get picked up and win. There's systems out there like that too. So why would you trade 38.62 over maybe 45.55? Well, can anybody in the room tell me why you would trade 38.62 over 45.55? Lower risk, yeah. Lower price risk, right? You actually have a lower price risk, but a higher chance of losing. That's right. You still need 2 trades to make up your thing, but now it's at like 1.25. Rob C., maybe you can calculate that for me, please. But the concept here is that a little bit more higher risk. Now, sometimes your curve, okay, the curve of making the trade happen, maybe this is the 38.62 here, and you got the 45.55 here, okay? And this kind of has a steady, inclination incline of trades, right? And the profit margins, you got to keep a pretty high success rate. You got to be 63% and higher, okay, to get good numbers, right? Here, okay, because you're at 55, you only need 56% success rate. Right? So you only need 56% success rate. So you might have something like this, and it might be a little bit less in the curvature like this. I'm sorry, I did that wrong. It is 56%. But you're going to have things like this. Okay? Because what happens is that you get sharper losses, right? Because it's going to lose a couple of times, but your wins are going to put your, even 3 or 4 wins are going to put your money way up, right? And then you're going to have a couple more losses. You might have 4 in a row. Or here you might only have 2 in a row. Here you might have 4 and 5 in a row. I haven't seen 5 in a row yet, but you may have 4 in a row. So it's going to give you a real sharp jump down, but then your positive ROI is going to go up, right? Why? Because you're doing this. And I'm going to show you journals from both types of people in trading. You're going to get an understanding of that. If I show you your journal, don't worry, I'm not going to embarrass you. I'm not going to insult you. But I'm going to tell you right now that if you're trading one of these 2 levels, you're way ahead of the game. The difference between the 2 on either systems really has nothing to do with the system itself. It's all about one thing, and that's you. You have a preference. Trading one way only will be the only thing that will gain you success from this type